Okay, so I'll kick us off. So obviously 2017, at the beginning of the year, marked the phase of lots of predictions and visions for the fintech ecosystem. So now that we're over halfway through the year, and we're at an event in New York, which is seen as one of the leading global fintech hubs, just feels like a really good opportunity to take stock, review the current ecosystem, and also focus on what's happening around the globe. So before we jump into some of the key discussions, I think we'll just do a real quick round of introductions, so 20 seconds, 30 seconds each, just on a bit of background, and then we'll go from there. Charlie, if you'd like to start first.
Hi, my name's Charlie Moore. I run a fintech company just down the road here in New York, Global Debt Registry. It's a blockchain-based registry that keeps track of loans on behalf of institutional investors and provides certainty around the loan, the borrower, the credit, the ownership, the pledge, etc., so that they have greater confidence and certainty in those assets as they flow through the market. As you might guess from my background, originally from the UK, and managed a lot of global innovation fintech initiatives.
Morning. First of all, I feel like I'm getting a suntan from behind me. The screen gives a lot of heat. Sorry, is that better? All right. My name is Roy Kao. I'm the senior advisor in the finance and commerce sector team at Mars. Mars is the North America's largest not-for-profit technology innovation hub. We possess 1.5 million square feet of real estate in prime location in the heart of Toronto. And I have a bit of a unique perspective in that I lived here for 9 years, and my kids actually were both born across the Hudson. So my primary focus as a senior advisor is I work with our ventures and startups, our later stage ventures and startups with actual revenue to help them expand their business either domestically or globally, and to scale into what hopefully will be the Facebooks and the Googles of the fintech sector.
Hi, my name is Igor Khmel. I'm the founder of BankX. It's a fintech lab accelerator that is right now we are working on launching bank as a service platform on blockchain with the first products that are KYC and tokenization on our securitization blockchain. And my background, I'm developing an office in New York in September, and originally I came basically from Eastern Europe. I'm Ukrainian, and I led innovation lab for the biggest bank there. It's for Sberbank for the 3 years. Before that, I was a graduate from Stanford Business School. I worked for McKinsey for Citadel Hedge Fund. So I'm built the team of ex-bankers. That's why the company name BankX, and we are working with the banks right now to help them to basically to catch up after startups and the fintech trends.
Hello, how's everyone doing today? My name is Ken Goodwin, Senior Managing Principal, Genesis Capital Markets. I've pretty much focused mainly on artificial intelligence, IoT, blockchain, fintech, redtech. I advise a lot of firms. I do a lot of cross-border deals. China, Japan is a deep heart for me. I've been in Japan for almost 8 years, 24 years, doesn't show in my face and age, but I've been speaking Japanese for a long period of time. My background, I started off at the New York Fed. I was part of the Term Asset-Backed Liquidity Facility Program, which is also known as TARP. I spent some time on the Royal Bank of Scotland, the Bank of Japan, and the Tokyo Stock Exchange.
Right, and just to finish off the introductions, I'm Adam Dunnett. I'm from London. I'm a tax manager at Fitzgerald & Law, and we help US companies expand into the UK and Europe. So my first question, and this is probably a bit of a quick fire question if that's okay, just a headline check. Do we feel that fintech is established on the global stage, and where is it in its life cycle?
So there's clearly multiple trends going on here. I think we've heard already this morning around the blockchain that we're still at very early stages of the evolution of the story. I think the same could be said for AI and a number of the other significant trends. So are they all running at the same speed in different places in the world? There are probably some variances, but I think the opportunities still are huge on an international level, and I don't think overall that we're very far into the story. But I think there will be inevitable nuances, on a regional basis, based on localities and regulation, etc., which I'm sure we'll dive into. But still we see massive global opportunities.
Yeah, I think so. I think that'll be probably the easiest question to answer for this panel, and the answer is clearly yes. It is a global phenomenon, and obviously there are different sectors and that are on different segments of the development cycle. But I think if you look, at the attendees in this event, and also at the number of events that are around the world, Finovate runs in London. In New York coming up in September, Money 2020 is coming up, and various Asian events that are taking place. I think it's clear to see that the fintech phenomenon is a global phenomenon, and I think there's an opportunities for us to being a bit of a history buff to look at past events and to help us perhaps avoid some of the mistakes on a global scale for where fintech is headed globally.
I would say it works here. I would say that RegTech is probably one is driven. That basically one of the things that is really frame the future of fintech, and banks are mostly following. They either answer and find out what to do there, or they're losing the market. So, and in some spaces, US is on front of other industries, other countries in terms of fintech. In some spaces are not. So particularly in terms of infrastructure, a lot of banks were quite old in the US, and any banks that are more than 10 years old, they usually IT infrastructure is obsolete. They don't have API, they're not integrated, they see all these problems. So that's why it's interesting, to know what models are used in some other countries and to replicate it there and backward.
I'm going to take a different spiel here. I think we're at the belly. It's kind of like it's like a belly, and it's going into the actual kind of a very narrow scale. Right now, we're at the belly. We have many different types of firms and types of operations, fintech, regtech. It depends on geography and jurisdiction, both regulatory. When you look at Africa, the payment solution process has been used frequently, so they're going to have a little bit more technology advancement. Singapore has picked up because they have a huge amount of training and development that's being done. Of course, the UK has really put a lot in terms from a regulatory standpoint, working with a lot of companies. So you got a lot of good work coming out of the UK. So here in the US, we're still trying to figure out from a regulatory standpoint what to do with fintech, regtech. What's going to be interesting is to take all that, and you may have a collaboration of AI, which will be a part of that, along with blockchain. So we're still progressing along the way. But right now, we're at this kind of bottleneck where we're at the belly, and eventually it's going to roll right up.
Great, thank you. And maybe staying with you, Ken, just given your regulatory experience, how well are the regulators dealing with the ecosystem? And do we think there needs to be a closer global alignment?
This is off the record. No longer at the Fed. God, I'm glad. That's a very good question. We're still, when you look at the regulatory landscape here at the Fed, of course, 2006, 2007 was very critical here in the U.S. As you know, the market pretty much froze, at least the primary market as well as the secondary market. So what it did, it created a Dodd-Frank Act and so forth. So when you look at it from the fintech standpoint, a lot of firms have to realize when you create a new app, that's considered to be a model. So now you have what they call model risk. And the policies or the regulations or guidance for model risk is considered to be linear. So it doesn't really look into the complexity of what the models are doing today. So the regulators are taking their time and going back and say, how can we adjust to the changes in the applications that you have today? So the key issues that they're looking at are cybersecurity, data integrity, and third-party risk management. So when you look at those three areas, those are the three areas that you're going to start to see the regulators focusing on. Those three key areas. And then from that perspective, they'll build their policies and procedures around that.
So that, yeah. So I would just add some examples how countries all over the world and regulators are dealing with this. So they created what is popular phenomena right now. It's regulatory sandbox. So they create the security, so the secure space where the banks can basically break the limits and try something new that has no like clear explanation, or there is some risk for them usually, and so it's not where they should usually going. There are startups that try so QIC particular stuff and some this blockchain as well. So there are some models that are not comfortable for banks to try, and they usually much better to try them if they know that there will be no any kind of punishment and all those internal punishments. So everything is secure, and this regulatory sandboxes, they're very well developed. I think I believe in the UK there is one in Abu Dhabi, there is in Singapore, something is developing right now in Russia. So it started to be very quite a good phenomena, and in many countries basically innovation is driven by central banks, and central banks are developing and establishing this regulatory sandbox for the banks, and then banks just come in. And yeah, I was in Russia. I was one of the members of the joint group for central banks, the leading banks and startups. So I was like there from startup view, and this is one of the ways how the banks can collaborate with fintech companies.
Yeah, I think from our point of view at Mars and also in Canada, that is one of the thorniest issues we're trying to deal with. I think you need to go back to basic principles and understand what regulators' function and jobs really are. They're not there to promote innovation. Their job is to protect their constituents, whether they're investors, firms from each other, or depositors, and they're perennially under-resourced as an extension of the government. And so if you look at it from that point of view, they are disadvantaged in many ways in trying to understand where the innovation is taking them and where they need to stay on the curve, never mind get ahead of the curve. So from a regulatory point of view, that is something that Mars is working with both the provincial and the federal government in Canada, understanding where the future of regulation and compliance lies. One of the ideas we're testing is perhaps we need to look at, instead of institutional relationship, in other words, banks being regulated as banks, brokerages being registered brokerages and capital market companies, and so on and so forth. We need to look at the idea of perhaps functional regulation, whether you regulating organizations who take deposits, organizations who are financial advisors, and that therefore cutting across swaths and understanding how that may or may not better serve both the incumbent financial institutions as well as the fintech and the startups without stifling their innovation. There's a lot of discussions on it. Recently, there was a panel in Toronto about blockchain and ICOs and how Ethereum founder actually is Canadian and Vitalik and actually had to go off away from Canada in order to set up Ethereum, and that is for many of the innovators in Canada a blot in our record, and I know the regulators are working very hard to understand how they can better serve the community.
So my business is at the intersection of digital lending and blockchain, so we have quite a lot of interactions with the regulators, and in general I think they see a lot of positives from those two sort of fintech trends, but also see the potential for some harm, particularly in terms of consumer lending. And in terms of their focus, very much is in line with as my fellow panelists said, those three areas in terms of data integrity, cybersecurity, and the third-party risk management. So I think some of these technology trends have the ability to actually help and reinforce and support that. But as per my comment, I think they could also have the potential to do things poorly as well. So there's definitely regulatory interest in these fintech trends. I think on an international basis, I think the important factor is sort of how they're actually managing and engaging with the fintech community, and where there is such rapid evolution, and there are some very interesting things going on. And I think that the US is struggling somewhat because of the regulatory structure and environment, and the fact that we have multiple regulators, across most asset classes, and that's where other countries, particularly the UK, with more concentration with the FCA, and their sort of sandbox initiative definitely makes it easier for fintechs to and established financial services companies to innovate in a controlled manner, with some support and blessing of the regulators. That's really difficult here. So even though in the US, 2 or 3 of the regulators have come up with sandbox initiatives, if you're regulated by 4 or 5 different regulators, then that's not helpful, because you're still going to get called out by the couple of other guys who weren't supporting that particular fintech innovation. So that is a sort of stifling factor, I think, on a global basis as to how the regulators actually engage with the fintech sector.
Great, thank you. All really interesting points. So just jumping topic now. So obviously, given the rate of change and the amount of unknowns in the fintech ecosystem, one thing that's really important is talent. So I'd like to just ask the panelists, what are the challenges for companies securing, retaining talent, and also where do we think the future fintech talent is coming from? Perhaps we can start first with Roy.
So talent, again, as an innovation hub where we support the venture and the startup community, talent is really becoming more important in many ways, as important or overtaking importance of capital formation for a lot of our ventures. Canada is a unique spot. Being so close to the U.S., traditionally there has been what we call the brain drain, and that there is an export of Canadian talent to the U.S. simply because the American market is able to afford a better level of compensation for drawing a lot of the our young graduates, well-trained graduates, away from our borders and into Silicon Valley, for example. That trend, we have seen a recent a change. We haven't stemmed it, but certainly the flow has slowed down. The other interesting trend, and as another panelist previously alluded to, is the Trump effect. We are starting to see the foreign immigration and talent who are coming from foreign countries beyond the Canadian-U.S. borders are starting to choose Canada as a spot, and the Canadian government is well aware of it and has recently approved and has launched a startup visa program for trained and educated technicians to come to Canada to build startups and also to join our startups. We have that is a Canadian education system is very blessed in especially our post-secondary education system, and turning out some great resource for our companies, and that's where Google, for example, has 1,000+ people lab in a Waterloo area, right on the very near campus, University of Waterloo. We hope to continue to leverage that and to attract not only talent but to also increase our focus on STEM education for young girls as well. That's another area of focus for us in order to really build on our own and build the source of fuel for our own internal innovation to continue.
Yeah. Yeah, so when I was working for Sberbank, I was in charge of innovation lab, and I bought a couple of companies, and I was solving the problem of retaining entrepreneurs in the bank. And it's basically a pretty good solution. It's earn-out. So when we're buying the companies for the bank, so we just keeping the founders for 3 more years on the vesting period, and they got money basically stage by stage at the end of that. While there was still a problem within the bank because no option scheme were working. This was basically one of the reasons why I left the bank, because I was not able as internal manager to make really money of my entrepreneurial skills. So it was basically impossible. So the reason was that you gotta leave the bank and then to get acquired. Otherwise, you're just not gonna make it.
I agree with my panelists here with the Trump effect on talent, that you do see a flow of individual brain drain going up north to Canada, rightfully so. But talent is also industry perspective too. What you're finding is the private equity industry is having a challenge with getting those millennials to work there. So they run into Google in those places. So within the industry, between the private equity firms as well as the startup firms, you have a big challenge for that talent. The big key here in the U.S. is the difference between equality and equity. So firms got to really start to pay more attention in investing equity in individuals of different ethnicities and backgrounds and so forth. So you do have universities here in the U.S. that are stressing more STEM and science, math, and so forth. But it has to show in terms of the types of individuals that you have at the firms, because they bring on different experiences with their backgrounds and so forth. So I think talent in the industry, and I have an 8-year-old boy, and I'm really STEM focused with my son, being that my son is part Japanese and so forth, and I see the benefit of math and science and everything else. But talent is really, really critical here in the U.S. because the representation needs to show in a diverse background for individuals, not just here in the U.S., but also Canada, Europe, and Asia, and so forth. So I think the notion that you're going to find more people going into math and science, at least the millennials, is to whether or not they can translate that into the right firms and the right industries. But we as founders and managers and directors and so forth, we also have to make sure that we select the right individuals, that we're open, and that we actually had an actual honest equity stake in their growth to keep them to grow.
Great, thank you. And I think we've got a couple of minutes left, and I really would like to go to a quick audience Q&A, but before we do that, just a quick question to Charlie around fintech ventures, raising capital. How do you currently see that? What are the challenges, and do we think VCs are doing enough at the moment?
That's a good question. So I think whilst fintech funding probably has pulled back slightly, and it's moved around in terms of where it's going, as we heard on some of the earlier panels, in terms of insurance tech and reg tech. Overall, I don't think the players and the process has dramatically changed, and I think New York and London and San Francisco still remain pretty central for that fundraising activity. So coming back to the prior question in terms of global opportunities and talent, that still is a key driver in terms of where you can actually raise the capital. But in terms of the overall process, I don't see it as wildly different now. Again, we heard about ICOs this morning. Overall, in the grand scheme of things, that's not yet had a massive impact on the amount of VC money available. And we're obviously seeing more strategic capital available from large corporations, the likes of Thomson Reuters, helping to fund fintech and get in on new ventures as well. So. We're pretty positive. We're going to be raising around in Q1 if anybody wants to talk to me afterwards. So yeah, we still feel pretty positive about where the VC industry's at, and generally seeing the same sort of model and approaches that we've seen previously.
Oh, so about investment, yeah. So from a Canadian, pardon? Actually, it's what the question that Adam had previously asked Charlie. So the audience, I think, is seeking a different perspective. From the Canadian perspective, we are perennially disadvantaged, given that we are 1/9 of the population of the United States, and plus we are also further hampered by some of the risk averseness that in our investment community. So. We are certainly the trend is on the rise, going to right, but not in the hockey stick, for a Canadian reference, shape that we hope for. So we are working, and Mars is very very much, and Ontario government, who's also represented here, are very much part of the equation. The Canadian and the federal and provincial governments work very hard to help backstop and attract a lot of investments, and that they're doing a great job in helping the community understand what the impact of innovation of the fintech can make, and also to help Canadian ventures, particularly in the fintech segment and other sectors like health, to look beyond our borders, to the countries like UK, to Asia, and of course the United States as potential export markets, simply because those markets represent much larger potential for the scalability of these ventures, and so from a Canadian perspective, we sometimes look at the Israeli model of taking an invention or innovation beyond the borders first before returning home to sell to our Big Five or Big Six banks.
Same question, but the gentleman in back of you, did you? Okay,
I'll try to make it brief, but it's a good segue. So my name is Charlie Kaiser. I run a company called Grio. I'm out of Washington, D.C. We are a government-compliant and accounting platform for government contractors, so very familiar with the regulatory environment for that. But I just want to remind people of what this regulatory environment was like several years ago. I actually took the first Bitcoin company public in a reverse merger in 2014 called Bitcoin Shop. This was about 3 months prior to the Mt. Gox failure, and if you don't remember this, you couldn't get a bank account as a Bitcoin company back then. We had as soon as the Mt. Gox failure happened, we were a publicly traded company with millions of dollars in the bank, and no one would bank us. We literally had an agreement with Cap One trying to get it started. They called us up 3 weeks later to say, hey, not only can we not bank you, we're going to shut down your CEO's personal account, we're going to shut down his wife's account, we're going to shut down the COO's personal account and his wife's account. So here's where we are to this day, right? And I think what's changed is that the analogy is there's a difference between what blockchain can do, and I'm looking at exploring blockchain for federal government. The question is, blockchain really enables at a protocol level a lot of changes, where the internet really was a small protocol stack and a big application stack. And I think what's going on is, do you agree that before there can be a lot of widespread adoption, the protocols have to be built on the back end for blockchain to kind of disrupt banking? That's part of what's going on. So I wonder does anybody believe that, and is that kind of what needs to happen before something kind of moves forward?
That's a very profound question there. And everyone's familiar with blockchain, the movement of general ledgers on one platform. Actually, firms are looking at blockchain now. So you have DTCC that's looking at it from the standpoint. I think JP Morgan, I know Jamie Dimon had Blight Masters, and her firm was actually doing that. I think that she sold it out. So you talk about from the back end in terms of, yeah. Right. Yeah, right. And I'm gonna answer this quickly. I agree with you 100%. I think that banks do need assistance in terms of building it out. I do believe that you do have certain institutions, certain banks that actually invested a lot more in the development of it. So you're gonna have more banks that DTCC is a little bit more further on the line, but that's central clearing. So you have to look at their operations perfectly for a blockchain in itself, where relative to, let's say, another institution may have a totally different product or strategy. So it depends on where that bank is at and who they're targeting towards. But I think I do agree with you. Certain banks will be further along the line. Others will be far behind it. But it's a technology that's been looked upon fairly well, because it achieves the purpose of allowing for both the balance sheet to be touched and acts at the same time to be connected, but also helps on the reporting side, which is what the regulators like.
Yeah, I consider.
Sorry, I'm so sorry to do that. I think we're going to have to wrap up, getting a bit of pressure.
Yeah, I will have presentation after lunch just on this topic. Yeah, okay.
But yeah, thank you all for your time, and obviously we're going to be around for the rest of the day so we can continue discussions outside. So thank you.